More Kiwis are ditching their house insurance, citing rising costs, and it's no wonder home insurance has increased nearly 900% since 2000. In the latest survey by Consumer NZ, 17% of people who have cancelled their insurance say they did it because of cost. That's up from 7% in 2022. Now, if we look at the main cities, Auckland house insurance, on average, is $2,111 per year. Christchurch is $2,757, but Wellington homeowners pay the most, around $4,589 per year. Now, that works out to around $382 a month. Remember that number. The Insurance Council says inflation, construction and repair costs, global reinsurance rates and taxes and levies have contributed to the rise. But also insurers have introduced something called address-based pricing. Now, this is specific to individual homes. It means the more at risk your property is, the higher the cost. Now, in the past, that cost was spread across properties in the same area. But how insurers calculate that risk and what specific data they use isn't publicly known. If you want to find out information on your property, well, it's not always easy. Across the water from Wellington CBD along the edge of the Hutt Valley is the seaside suburb of Petone.
Hello, hi. Laura.
Hi, Rochelle.
You've got such a beautiful home.
Thank you.
When the Gracies bought their home 9 years ago, their insurance was $200 a month, but not for long.
It went up, to $400 or $500 a month. Then it went up to $600-700 a month, and then last year they gave us a price of like $950 a month.
Remember, currently the average in Wellington is around $382 a month.
Putting it up by 42% is in one jump is way too much for people to handle.
The insurance company said one of the reasons the prices have gone up is because we're more prone to natural disasters or flooding.
We tried to track down all the official information we could through the council websites.
Yeah, we're stuffed. Look at that.
Yeah, but what does that mean?
But these guys are okay, and these guys are okay.
What does it mean? It's a very good question. And the two maps show two different things. They're different colours, they're different... this one shows the sea being flooded, which kind of doesn't make sense.
It's confusing, technical and difficult to interpret. Even the experts struggle. Consumer NZ says there needs to be consistency in the information available.
It would be much easier to make future decisions if we were all singing from the same songbook, essentially, and had access to the same data.
She says the lack of transparency makes it difficult for anyone to understand why insurers are hiking up premiums.
We actually hired an economist to go through the publishable annual reports of the insurers, and we couldn't quite get to the bottom of it. After the 2023 events, they did take a financial hit, but they all still made a profit.
We contacted the Gracies insurer. They said because of address-based pricing, the Gracies were at a higher risk of earthquakes, which was news to them. They called around other companies, but no one would provide them with a new policy. So they stuck with their current one and reduced their cover, paying a more manageable $650 a month.
There'll come a point where people just simply can't afford it. And so, you squeeze and squeeze and squeeze, eventually something's going to pop.